Welcome to the Alfalfa podcast. We're in the studio. What's good, boys?
We're in a studio.
We're in a studio.
The pre-studio.
We're in
the
our
waiting room.
This
pre-staging.
is like mezzanine financing.
Yeah.
Bridge loan.
But this is big. This has been a long time coming. We're one step closer to the studio.
We're one room.
We're one room away.
One room closer to the studio.
Yeah. You won't know the difference when you see it later, but we're basically sitting in the living room area of our studio. But we're really excited because this has been a long time coming. And if you're new to the podcast, can you just allow me to reintroduce ourselves? Is that okay?
Only if you do it in Jay-Z lyrics only.
I was like, did he do that on purpose?
No, it just kind of flowed out. I mean, so we are four radically moderate entrepreneurs and investors, and every week we're uncovering the latest alfalfa in money and life. And we do this podcast twice a week. We're 25 episodes in, little over a year of doing this, and yeah, it's been an amazing journey. Alfalfapod.com. If this is your first episode listening, take a look at the backlog. Hop in with us in the Discord.
A lot of good calls in the backlog, actually.
Yeah, a lot of good calls. Subscribe to the YouTube. We're going to be doing these hopefully live soon. So what you're watching right now on YouTube or on Spotify, we'll hopefully be live streaming this every Wednesday. Is kind of our selected day. We'll see how it plays out, but we love and appreciate you guys being here. So today, we're going to be doing, we're skipping our macro talk to kick this off. We're going to be doing our alfalfa round, and then we're going to focus the majority of our discussion on what's going on in the world of finance. Obviously, there's been an absolute shit show this last week with USDC, with SVB, with the markets in general, and the bank runs that were about to unfold that, thank God, the Fed stepped in to backstop SVB and not allow it to happen. So we're going to dive into all of that. Any other announcements? Oh, I have one. I'm drinking Dry Farms wine. Shout out to Dry Farm Wines. They sent us another box. Really, really cool company. So you can subscribe, use our link. It's in the description below and alfalfapod.com. And they basically give you like a curated box of wine that is extremely low sugar. It's basically hangover proof wine.
What are we drinking today?
Yeah, let's see here. We've got an Austrian red.
Grube
Roschitz. It's a 100% Zweigelt from Nero de Steig
Apologies
region.
to all the German fans out there.
First of all, I think they're flattered that I even tried.
That's Austrian.
You're welcome, Germany.
It's Austrian,
You
sir.
got, you got some great comments about your Arnold
my
impersonation.
They speak German in Austria.
Sure,
Yeah.
but I did get a lot
The
of comments.
best comment
about
is
that.
like, the bro just casually nailed the Arnold impersonation.
But I mostly just got told off for making a general statement, which
Yeah.
is great for the YouTube algorithm.
Yeah, it could be a growth hack.
Yeah.
You'll just be wrong all the time.
Just be wrong.
Yeah.
They don't execute you in Austria for throwing eggs, apparently.
Yeah, apparently not.
Weird.
All right, let's dive in. Any other announcements?
I think that's it.
Cool. Let's do it. You want to kick off, Nick? With
Yeah,
some-
so I got a quick smattering of things for Alfalfa Round. The first quick one is I went long Bitcoin, short ADA. It was like 2 weeks since I actually talked about it. I find I get these I have an idea and then I just get like stage fright. Like I don't know. Like I just dilly-dally around it and don't get to it, procrastinate. Anyway, I finally got around to it yesterday. Today's Wednesday. So I got it on Tuesday. I got in around the ADA BTC ratios around 1,400 sats. I did 50K long Bitcoin, 50K short ADA. And I realized like if you don't use leverage, these like spread trades are just kind of boring.
Yeah.
So also on that, when you enter a trade like that, do you go like, is that your full allocation to that trade or are you sort of tiptoeing into that one?
I tiptoed a little more today. I added another 25K on the ADA short. But Steven, when you do these, are you usually using, like you're levering up your actual equity principal to make them interesting, right?
Oh, yeah.
Okay. So that's what I think I need to
So
maybe
if
find
you're-
some
if
points
you're using
to
like a decentralized exchange, I think the way to do it is like if you have like an account that has all your cash in it, then you would transfer it to a different wallet that you want to lever up and then use that wallet.
right.
I mean, this is like a trade. It's not a
Right. This is like a
investment,
maybe,
right?
I think it's like a 1 to 2 month thing.
Yeah.
Maybe.
So whenever you're making a trade and you're not just buying and holding something, you always want to be aware of like, what am I risking? That's always the first question. Like, how much am I willing to risk if this trade goes awry, especially if you use leverage, right? So step one is like, how much do I want to risk? And then step two is to kind of look at the price, look at the chart. I assume you've done some analysis and go like, okay, where am I definitely wrong on this trade? And then you sort of work the math backwards, right? If the price goes to there, how much do I lose? And then you just lever up the trade size so that you lose. If that amount is like $1,000 or 5,000 or whatever, you just lever up the trade so that when you get the fuck out of Dodge, that's what you lose. So that's how you want to be thinking about trades versus investments. Like investments, it's like you're holding it forever. You believe in it for a particular reason. There's no funding rates usually. All this stuff that applies to trades. So
these trades are where I get the
so
gun shy.
What about the idea of like leverage? Because you could use more principal versus using more leverage to get the same risk in dollar terms.
Well, I think like it's kind of like real estate. You want to use a little leverage to get a higher return off your principal.
Right,
So,
but you could go 100x on these things. Like how much leverage
well, I think
it
it
typically
depends
go
on
with?
your liquidation price on your short. So on the short side, to me.
Yeah, leverage for me is like I trade 20x leverage all the time when I trade.
That's what I'm
But
asking.
it's not because I'm betting my entire account and if I lose 5%, I blow up. It's because I'm keeping as little money as possible.
That's what I'm
on the
asking, because I think you could come in with more principal and less leverage, but you're comfortable
It's
with the 20x
it's
level.
a capital efficiency play and it's like a safety play.
This is supposed to
if
be
you
a
do it
small
right.
trade. I don't want to put any more capital into it. So I guess, I'll probably express it more by adding some leverage if the opportunity presents itself. And I got some ideas from Ben Cohen's like pay channel. He had some good public YouTube things, but he said a potential good target might be 800 sats. So we'll go from 1,400 ADA to BTC ratio to 800. So we'll see if it turns into a nice juicy return or not. But the other thing I want to mention was today, in fact, is the 1 year anniversary since we were last at 0% interest rates.
Yeah.
So
Happy ZERP Day.
on March 16, 2022, we got a first increase of 25 basis points. And I think until July, we were still under 1%. So now that and we'll talk about this in the main section.
So it took a year to start collapsing. Got it.
Pretty steep hiking
almost-
schedule.
But keep in
Almost
mind,
on
it's only
schedule.
been a year from 25 basis point hike. So we haven't even got like a year from the big boy hike. So anyway, now that we're potentially approaching the question of a pause, I thought it'd be cool to bring some data in and look at what happens when there is a pause. So this data is from 42 Macro. Highly recommend their paid subscriptions. But typically, when there are different types of pivots. There's typically a pause where they just stop increasing interest rates, and there's a pivot where they start reversing interest rates and start bringing them back down. When you look at the pauses, on average, the bottom of the bear market trough happens 1 to 2 months before. There's only 2 instances in the time scale of this. So this was one in 2019. Early 2019, end of 2018. And then the last time they just paused and didn't pivot was in 1942. So there's not a lot of data points.
Wait, so you're saying there's only 2 times when they've paused and not pivoted?
Correct.
Okay.
Just paused and kept them flat. There's a lot more instances of when they pivot. So what I found interesting is what happens when they actually pivot. Because on a median basis, the bottom happens 1 month after they make any kind of change. But when you start looking at these pivot scenarios, because everyone's excited for a pivot, I just think it's important to bring some data because it may not be as exciting as you want it to be. So the last pivot was in 2007, and the market bottomed 18 months after the actual pivot.
18 months after, not the 1 month after that you just said.
Correct. So like if we zoom in here
Typically,
on
the bottom
2007 pivot, 18 months after. Then in 2001, we also
What was
have
the 1 month you said?
Oh, sorry. 1 month before, 1 to 2 months before is when they just pause. That's when the bear market bottoms, typically 1 to 2 months before they just pause. So if we think a pause is happening, you might feel a little.
You're saying pause and no cuts.
Exactly.
A weird thing to predict.
Right.
Probably not happening here, I'm guessing.
Well, we'll talk about that
Maybe.
later. But my point is that people are excited about a pivot. And I'll name off some other instances. So in 2001, they pivoted. The bear market did not trough until 21 months after. 1987, they pivoted. It bottomed 2 months after. 1981, 14 months after. So the reality is, like, we're all excited about a pivot, but that usually means something fucked up is going on, and it may need time to cycle out and take its place. But if you just look at those 2 times we only paused, if you think that's a high probability.
What were the 2 dates of just a pause?
Just a pause was January 4th, 2019, and July of 1942. And in those scenarios, you look 3 months forward, the S&P 500 was up 13%. In 6 months, it was up 20%. And in 12 months, it was up 40%. So if you think just a pause might happen, it tends to look pretty good. Pivot.
And this is a sample size of 2, correct?
Exactly. So that's a good point to
Statistician
just say
in my
3
my
to 4
brain
times.
is going,
And then like fundamental wise, 2019 looked so different to now.
Yeah. So I guess the takeaway for me was pivot, not so great immediately.
Yeah, that's a
and
good takeaway.
Beware. So anyway, that's mine.
Are we allowed to share this document?
No.
Okay, I thought so.
Yeah.
Sorry, people.
But I think
We covered it.
we pulled out the
Go
stuff.
give,
but
go give Darius your hard-earned money.
yeah,
That's all
Yeah.
good stuff.
it is great stuff. Okay, so Armand, you want to go?
Sure. On Friday, I bought some $sign coin.
Woo!
$ coin. Nice.
I like it.
We've been talking about that for a while.
Good stonk.
I think we're still yet to really do our deep dive. I know, Eric, you're wanting to dedicate a time to that conversation, but I thought since I did it, perhaps we could have a little one.
I hope
a
you
little
tiptoed in because I'm hoping
whistle
for
wetter.
50% down before I do my deep dive.
Yeah, I mean, I don't know if it was a tiptoe. It was a little more than a tiptoe. I intend to keep accumulating because I'm actually cycling out of other stonks into coin. So it's a bit of a, I don't know what to call it. And it's like I'm still in stonks with this part of the allocation, but I'm just cycling into a different stock in general and have a little higher conviction on this one and taking probably at least 25% of my stonks in general and cycling that into ETH. So just thinking a lot about the growth bucket based on the conversation we had recently, which was one of my personal favorite episodes as well. Somebody said that in the community, in the audience, in the Discord. I think it was D. Koch actually was saying what a great sort of episode that was. And I agree. It was the type of conversation that I really like to have because it caused me to sit back down, look at my thesis in Notion, write out a new version for the rest of 2023. And it allowed me to make some decisions and take some action. So my target was $56 and it hit and I took some action.
Okay, congrats.
I like that on a long-term time frame.
I think this might be a spicy take, but I think coin is a way better way for most people to get exposure to crypto than buying ETH. And I'm fairly certain coin is going to outperform ETH by a lot.
Oh,
I want to debate that in depth. Why do you think, though, before you get to the ETH versus coin, why do you think that it's a better form of exposure to
Because
to
you sort
crypto?
of get a broad swath of exposure to all of crypto activity in a way. And you get some regulatory protection because I think there are a lot of scenarios where regulation happens and it doesn't kill crypto entirely, which means that certain entities in the space that have particular moats are going to end up like getting all of the monies. You see this a lot with regulation, where regulation ends up being like very, very lucrative for like whoever the incumbents in the market are. And then the government effectively picks winners and losers in a way. And a gigantic swath of the losers are going to be like random coins you might buy that are maybe securities, right? But like the winner, it's not hard to imagine the winner being like the one publicly traded company in the United States that is like uber, crypto, right? Like they're the one. They kind of have like a monopoly on, U.S. regulation if it's not completely stupid.
Right. Here's one that's already a security. It's like been approved as such. And we know that this is supported. It is US centric. Like, I think that the powers that be are going to want to capture some of that tax revenue. This is a way to do it. You know, when you get into like decentralized coins and stuff, they're like, oh, well, how do we capture that? Well, Coinbase, here we go. Like, I agree with you guys that Coinbase is the play. But, you know, here's my alfalfa. It's like I've continued my journey of reading charts and stuff, and I'm looking at this particular chart right here that Nick just pulled up is the Coinbase 1 week, and I'm looking at a steep fair value gap lower that is probably looking to be filled at some point. Steven, as the guru in this, you know, you can feel free to disagree, but that to me looks ripe.
I do disagree. But we
good.
can have that conversation.
Good.
We
Yeah.
can have a
So
conversation
this to me looks like I do want to own coin, just not quite yet.
Yeah, I mean, I think all of crypto is probably retesting those lower prices, you know. So I'm not saying this thing isn't going lower. It probably is. But I think starting a DCA at these prices, what's the valuation? 13 billion?
Yeah.
Yeah, like it's not hard for me to imagine
It's
Coinbase
small
being
compared to some other stocks.
yeah, like Coinbase should be a $300 billion company someday if
Or it
crypto
will.
is not like
Yeah.
a joke.
And
if crypto is not a joke and it's not a $300 billion company, then we lost.
Yeah, and like ETH also lost. So like I agree with the whole point that like Coinbase is probably the best way to express like a bullish crypto view.
Yeah, like scenarios where ETH wins and Coinbase loses,
That doesn't
Very
exist.
rare.
like the US kind of kills crypto just for itself, but it doesn't hurt ETH that badly. I don't know. Like
Yeah, I see both going down. Not
they're probably
just-
they're probably
Yeah.
tied
But there
to the
is a
hip.
scenario where ETH actually loses and Coinbase wins just because it
Totally.
ties itself to a different horse, and that horse wins and ETH doesn't. That's not my thesis, but I could see that happening.
I mean, I know it's not time, but I just worry about what happened with all the banks this last week and the U.S.'s sort of perspective on crypto as a whole and its support of the industry. I mean, what are the remaining crypto-friendly banks right now?
I have no idea.
BNY Mellon or something. Like there's
above my
like
pay
some
grade.
big ones, but I'm wondering, is what we just saw transpire over the last 7 days, is that even crypto related? Because most of the stuff that I saw with Silicon Valley Bank was like, that's TradFi. That's TradFi stuff.
You want to get in the game plan, or do you have some alfalfa that you want to share, Stephen?
Yeah, I don't know how much alfalfa I had, but I've had a rough week. I got rugged in Euler. Did you see the Euler hack?
Sorry, man.
Yeah.
Yeah, I mean, so I came home Friday night and I saw Coinbase at like, not Coinbase, USDC at 87 cents. And I was just like, fuck this, I'm arbing this. So I had actually sold at like 99.6 earlier in the day. I remember I came in here and all frazzled actually in that meeting and panicked some people. So sorry about that. But then I came home and I was like, nah, fuck this. This is going back up. So I sold everything back. And then I was like, this is free money. I have to buy more, because I really did think it was kind of free money. I thought it was just like classic panic. I thought everything was closed over the weekend. People were losing their shit. I've been through some panics, and like the thing in my head was like, this is just panic. So I started borrowing against my assets on Aave, right? I just started borrowing Tether and selling it for USDC. And then Aave ran out of money. I think I actually may have been the one who capped out Aave at one point.
You bled it
There was
dry.
Not a lot left. Yeah. Like because there was a ton of money available. And then all at once I started seeing like all the Tether get used up like very quickly. So I did that. And then I ran out, so Aave ran out and I was like, well, Euler exists and Euler is pretty good. So I threw some money in there and I borrowed on Euler. This is Friday night. And then Sunday night at like 3 a.m., right? Like I was going to unwind this whole trade Monday morning. And then like I woke up Monday and there's like a hacked the entire protocol, basically.
$200 million.
200 million. Just gone.
We have no idea. Like you started studying coding, but like we have no idea how to analyze a smart contract to determine whether or not that's safe. We just
like you don't know how to analyze if your deposits are safe at a bank, maybe.
True.
This thing had like 6 audits. The devs are very, very high quality. I mean, Coinbase is an investor, Jump is an investor. This wasn't some like weird, shady project, you know. So yeah, like incredibly unlucky.
Bummer.
Honestly, like that's just the one day I could, and I have like an amount I limit exposure to, and because like this stuff happens, I've been rugged like I have a lot of battle scars at this point. I'm kind of jaded about the space at the moment, to be honest, because like I am a pretty sophisticated investor, and I don't know how anybody can actually just use this stuff without getting wrecked. To be quite frank, it's kind of brutal
way
out
more
there.
immature than we realize, or I think
Yeah,
that we do now realize how immature it actually is.
It's very nasty out there, and that's why thankfully, I mean, we've been talking about this for a while. Like I've been taking money off crypto for months now and just buying bonds. Like there's a point where I just looked at bonds and said, why do I even have stable coins, you know? So
maybe that's what Silicon Valley Bank thought. I'll just buy some bonds.
yeah, but for people out there, I mean, like I limit myself to like 5% of my portfolio in like a tier 1 protocol, basically. And I doubled it for this because of the ARB, and I was like, look, this is for, and I actually did make quite a bit on the ARB. I made 10% on everything I did in a day, which is pretty good.
It's more like 5 hours. You were up from like midnight till 4:30 in the morning.
I'm just like the whole time.
Yeah.
But yeah. I mean, I haven't slept in days. I am like absolute crackhead at the moment. That was the start of my crackiness, and it's just kind of gone on.
Well,
But
for how
yeah,
much you got rugged, you look great.
Thank you. I woke up this morning at I woke up at like 3 a.m. yesterday for CPI because like it's like Christmas for me and I can't sleep, and I didn't sleep yesterday, and today I woke up at 4 a.m. again and I put some trades. I actually had a crazy day today. Like I put on a bunch of like trades last night, like some orders on like S&P, just some kind of swing trade stuff. And I woke up and I realized I had forgotten to cancel some of my other orders. So orders I placed to close a trade actually made me go net long. And I didn't realize it. So I woke up this morning and I was like, ooh, it hit my targets. And then I looked and my position size was like 4 times my normal position size.
I've done that before.
And I was like, oh God. And I spent like 4 hours this morning, like watching, I don't know if you guys saw the market today, but it ticked down, 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 down. It got to 1 tick from my liquidation point and then completely reversed. And I ended up having like my biggest like day trading
It was a
S&P
huge
day
reversal.
ever.
Yeah.
Insane reversal. And I was like, thank you, Jesus, for giving that for me, because I really needed that. So yeah, I don't know if there's any alfalfa in that, but sleep. Don't put all your money in DeFi protocols.
Yeah, I like that position sizing alpha. That's good.
Yeah, check your orders, God.
What's the name of that scotch? It's not scotch. It's Japanese whiskey.
I got a little
Dude, I think that's
cubby hole
that's-
Japanese
Nika
whiskey.
coffee.
I just want to say, I think that's booze alfalfa for
Okay,
sure.
it's,
We should save that for the life episode.
Nika whiskey, coffee grain. So it's Japanese whiskey with a little coffee grain in it.
Yeah.
It's tasty.
Nika coffee is amazing.
Show the.
Always been a huge
I think
fan.
my
label
cousin Tyler might have mentioned this one before.
Oh, yeah?
Or something similar to it. But yeah, that's
Yeah,
it.
she's pretty.
It's nice.
That's good stuff.
We go through this one quickly over here.
Yeah,
in this
that's
office.
good stuff.
It's coming in handy right now.
So I share your sentiment, except for completely different reasons, Stephen. And maybe I don't know if it's okay to start there,
Yes.
but yeah, I mean, this past week was like really, really disheartening for me. I think I was even venting in the Discord and just kind of like feeling pretty cynical and sad, honestly, about the whole situation. And I mean, it was close to being an absolute goddamn disaster. And even though it did not, and what I'm referring to obviously
It's
is
the
SVB.
USDC peg, right?
Well, I'm referring to SVB.
Okay, good. Thank you for clarifying.
Yeah.
Because I was feeling despondent about.
No,
Circle.
I mean, the USDC thing to me was like, okay, shit. The move I personally made was like, I just immediately moved everything to Tether and I ate 5 to 6% and I didn't swap back.
You didn't have
And
a Coinbase account?
I did not know about that.
Oh no.
Yeah, I do have a Coinbase account.
But they turned it off.
Who doesn't?
They turned off
No,
the swap.
I did not
swapped
know
a
that.
ton of money on Friday.
So what you're
Just
describing,
and
which
Insta-cashed it
you
out.
said it in like our group chat, but I didn't know what you meant. You basically said you moved all your USDC to Coinbase account. You swapped for Tether there because it was a 1-to-1 peg there, but on Uniswap it was not, and that's what I did. I did it on Uniswap, and so I
Yeah, I have some wallets that
Lost
I just
like 5-6%.
keep isolated, but everything that is like connected to my stuff, I just sent to Coinbase and cashed out immediately.
Well, that was smart. Myself and some others did not. I mean, I was talking to Carne Asada Chris about it, and we were just strategizing, and that's what we decided to do. And
Some
it was just to be able to
PTSD.
sleep at night. You know, I was like,
Yeah.
all right, if this thing goes to zero, I don't want to lose all my USDC.
Meanwhile, Eric is in Vegas on a boys trip drinking,
please talk about
and
this?
he doesn't have his laptop with him.
Yeah.
And he's like, "Guys, I'm wasted. Like, is the world coming down? Like, I have a lot of exposure. What's going on?"
I want to talk about this.
TLDR.
I want to talk about this. So, first of all, I'm on mushrooms. This
All right, I wasn't going to disclose, but yeah.
no, this needs to be said because like I am on.
I think
a-
the audience knows.
I'm on a like I remember looking at my phone and everything is just like iridescent on my phone, just like the screen is
I'm
just like
surprised you could even look at your phone.
oh, like I barely can, and I'm like we're all texting each other, and I'm not really participating in the text, but I'm like seeing the price of USDC going down like 92 cents, 90, and I'm like, oh god,
And now
really
like
high.
I couldn't have handled that.
retrospectively, I realized that sending you an article didn't help you because you probably couldn't read an
well, I
article.
couldn't read it at all.
Yeah.
But like I remember like because when I'm on mushrooms, like first of all, it's not really just the phone that I'm thinking of. I'm thinking of like the bigger picture, right? So I'm seeing like Silicon Valley crumble. Like before that, Silvergate out. You know, what's the other one in New
Signature.
York? Signature out. So then USDC crumbling. I'm like all these people are just gambling in Vegas and they have no idea that the financial system is just cracking beneath them. And I just felt like, wow.
And it was.
And for a moment, I thought it was, but I think we'll talk about it in the next segment. But like those fears that I had, like I was on the edge there, thinking like, oh, it's all over. I'm off the edge now, but like those thoughts have not left me. Like I actually believe that wasn't the moment, but that was a domino, and that moment is
yeah.
coming, and that's how I feel.
So you feel the moment is coming where we would see a mass run on banks, and
Yeah.
we see some form of collapse of the entire financial system?
Something akin to what happened in 2007-8 is like what I'm imagining, where like here the U.S. government came in and backstopped that loss, but on Silicon Valley Bank they were holding government-backed securities. They were holding treasury bonds. They were holding agency mortgage-backed securities. Like those are like the safe ones, you know. But there's a lot of banks out there that hold risky assets, right? And Silicon Valley Bank is dead.
Yeah.
It's dead off of holding the safest shit ever. They mistimed it, right? They played the yield curve wrong. They mistimed it, and there was a run on their bank, and that sucks. But like, there's banks out there that have way worse shit on their balance sheets. And what I'm worried about is like, what happens when people find out about that? And you know, we can talk about what I'm sort of alluding to. But
Yeah, I mean, my perspective going forward for this and just like a general game plan is trying to draw some conclusions from it. And I know a lot of people have been drawing the conclusion, well, this is good for liquidity because the Fed backstopped these specific banks and provided liquidity to them. And so it was liquidity positive. I tend to think it's quite very liquidity negative just because,
Who thinks it's liquidity positive?
I mean, if you're on Twitter, I mean, there's
Twitter-
literally like two camps of like,
Bankless just said this is a version of QE
right. I don't think it is.
Yeah, I don't think it is either.
And
in a very short term. It
right,
can be.
right. And so I think it's negative for liquidity just because these regional banks were typically further out on the risk curve in terms of providing lending to businesses, to real estate projects. Like they're the ones who know their community the best, and they're the ones to lend to mid-market businesses, construction projects, industrial projects. And now these banks are not going to lend as much. They're going to be a lot more restrictive. And their depositors are going to demand that they're going to be more restrictive. So I think the tightening from these regional banks, and that doesn't even count the deposit outflows from these banks. So first of all, their deposits are outflowing these bigger banks.
That's the big thing. We gotta. Well, even they're not even so much outflowing to bigger banks. They're outflowing from banks. Like we have a fractional reserve system. Like the money supply is basically like levered bank deposits, right? So when people pull their money from banks, on top of the tightening and lending standards and everything you mentioned, Nick, like that is going to be like deflationary.
So Goldman Sachs today, they lowered their GDP forecast by a large chunk. They were forecasting 1.5% GDP growth. It's now 1.2, just because of this moment. If nothing else happens from here, they're already expecting a decrease in GDP.
That's a good point. That's a good point. It does remove a ton of liquidity just based on the fractionalization.
Right, and it's because banks with less than 250 billion in assets comprise 50% of commercial industrial lending, 60% of residential real estate lending, 80% of commercial real estate lending, and 45% of consumer lending.
80%?
Yes.
Wow.
So these are the guys doing all the lending.
Yeah. Now, JP Morgan, Wells Fargo, Bank of America, they have assets, they may continue to lend, but they may also just be more restrictive in general too. So even though the Fed is providing this backstop, which by the way, I don't, if you had to like put a size to it, I don't think is that big. I think that the current facility is like 65 billion or something like that. And I know the way it works, like the entity where the money goes, they can actually lever that like 30-1 if they need to. So it can actually turn into a large amount of money. But regardless, the market itself is going to be a lot more restrictive. So that's the main thing that's coming up for me in terms of like starting to formulate a game plan, is that this is going to contract the economy, not necessarily expand it. Credit will not increase because of this.
I agree with that. I also don't think that we're going to have like any sort of collapse. Like I'm not really worried about what you're worried about. Like when I see what happened this weekend, I saw a bunch of government officials who were like, oh, we're not going to do the dumb crap we did in the past. There were a lot of obvious mistakes made in the past, which are basically just like they could have thrown money at the problem and fixed it, but they didn't, and stuff blew up. And like COVID, they threw too much money at the problem, right? But to their credit, like stuff didn't blow up. And then here you saw the exact same thing, boom, backstop everything. So it's clear to me that the long-term risk isn't some like deflationary like credit blow up, but I think it's just like they're just going to, it's just more indication they're going to turn on the money printers at some point again.
Yeah.
And that's going to be the release valve.
I'm not worried about other banks blowing up, but you guys are familiar with like the concept of like shadow banking sector.
Yes.
Shadow banking obviously gives it a negative term, but these aren't necessarily bad businesses. I mean, there's all types of like shadow.
Could you explain?
Yeah. I mean, like a private equity firm is a shadow bank, right? They provide lending to companies. Hedge funds are, even down to like your paycheck,
your brokerage.
Yeah, yeah, exactly. I mean, your Schwab, TD Ameritrade, all the way down to like paycheck financing, hard money lenders like
Aave.
Aave is part of the shadow banking sector. That is a very large component of this economy. And so there's not as many regulations for that cohort of companies as there is banks. So we may find that some of these portions of the shadow banking, part of our financial system may have also got themselves into similar problems, and it may take, months for us to find where the secrets are. So I'm more worried about the kind of non-bank.
Can you guys indulge me this like doomer scenario though?
Yeah.
All right, you want to indulge? Let's go.
Let's indulge it.
Pitch me.
So I think there's probably like multiple things going on here. One, I want to just dismiss entirely, which is like the bank run scenario. That can happen to any bank, right? And SVB was brought down by a bank run, not by really like bad investing. They did buy bonds at a time when bonds were really expensive.
I mean, it was bad risk management though.
Terrible.
Like terrible.
I mean, to buy those bonds was maybe the worst investment I've
And
ever seen
also
in my
their
life.
entire deposit base was correlated to like one specific industry, tech, which
Right.
is like this. Basically, it's like an interesting take. I heard somebody say was that like tech is the real estate bubble of this bubble. We don't know it yet, but that's what's happening.
So they all pulled their money at the same time, and like I think any bank, any modern bank would have a tough time handling that level of deposits at the same time. So I just want to isolate that and be like, okay, well that is not what I'm actually scared of. What I'm scared of is like how Silicon Valley Bank held safe assets that did go down in price, and that's what fucked them. It was like the run at the same time that their assets were not performing well.
What fucked them is they didn't do any interest rate hedges.
Agree.
Right?
But like there are things out there that exist in a large way that like I don't think we're giving any credit to. I'm even talking about us
That are
four.
worse decisions where if the same effects took place, we just have an expanded version of what you just saw.
Precisely.
Like
And
what?
I'm
Yeah,
talking
take us one step
Yeah.
further.
What I am talking about, and I'll name it, is basically commercial real estate in office. Office commercial real estate is fucking dog shit. Since COVID, we all know all of our friends who stopped going into work, right? And like I think that we all agree that might be stickier than we imagined. Like a lot of people aren't going back. So there's a lot of leases from companies in these like office buildings that they don't even need anymore. So those leases expire. You got the owners of these buildings; they have to refinance. They're on short-term mortgages because those guys aren't actually trying to own these buildings forever. They're trying to flip them. So they're on short-term mortgages. They can't refinance because the interest rates now are astronomical. Banks don't even want to refinance. So I think I see a situation where the owners of these like sky rises are going to walk away from the buildings that are fucking half full at best. And we're not considering that this is risky. Like we thought Silicon Valley Bank was safe. It folded. It owned treasury bonds. Like what about the ones that are holding riskier shit?
Yeah, if people watching or the audience wants to check out banks that have a lot of commercial real estate paper, I believe it's Andreas Steno Larson on Twitter. He posted just a few days ago a chart that showed as a percentage of total assets what percentage they held in commercial real estate debt, but for each bank. So if you ever want to look at, okay, which of the banks hold the most commercial real estate debt, I know there's a chart there, and I'll find it and I'll post it in the show notes below.
And
But,
like maybe there won't be a bank run on those banks at the exact moment that these assets are depressed in price, and that might give them enough runway to get out clean. But we know that this world moves very freaking fast now. Like
Yes, all it took was one sliver of information.
and then Twitter just
and
takes it over.
of course, because it was so concentrated in tech, every VC and every founder was very concerned. And then as soon as it slipped to one group of investors and founders in one WhatsApp or Telegram group, it was wildfire.
And I don't think that the government is going to backstop those losses. They're risky. They're not like government-backed securities. Like I don't see. I see that being
The other
sort of
ones.
like the Lehman type
So
that actually dies and then we fucking crumble.
We've already seen this. So I think I mentioned it when we weren't on the pod, but I was in this meeting for this real estate group. They're looking for limited partners to invest. And he said, we have a really good, interesting deal coming up. It's at an amazing price. And he told me the price and the cap rate. I was like, what? That seems really cheap. I was like, why? What's up with it? He's like, well, it's a building in Irvine that Blackstone owns. And they are very motivated buyer right now because they need liquidity. And so they were selling it like a 7 or an 8 cap.
Motivated
Right.
buyer or motivated?
They're
seller?
motivated seller.
Okay.
Yeah, I must have misspoke. So anyway, they're trying to get liquidity, and Blackstone actually defaulted on a like a Finnish office portfolio already. So
saw
what you're
that.
saying is already happened in different parts of the world. They could not
First
meet-
domino, boys.
They
First
couldn't
domino.
meet their debt payments. So I think it's already happening. It may not feel like, if we look back, it's not going to feel like Silicon Valley Bank just because this might happen, spread out slowly over time, and it may not make the headlines and concentrated over like one weekend. But I think you're spot on.
I'd be really curious where the just general audience sits on this, because I feel like there are two camps of people out there right now where they're like, this was a blip, and it's a passing thing. We're pivoting or pausing, whatever, and we're turning a corner here, and there's a little bit of excitement. And I think there's this other camp that's sitting on Team CFA saying, "Yeah, dude, like shit's about to get really dark."
That's exactly how I framed it. I said, this is either the event or this is the first domino.
Yeah, I'd be really curious. We should people should comment on the YouTube video and let us know like which camp they
is
sit in,
this
or in the Discord,
Blip,
wherever.
yeah, in the YouTube comments, is this blip or is this dark ages? And I also want to know, do you think this is
I like that,
this
blip
is
or
a
dark
form
ages.
of QE, or is this actually restricted?
So I'll tell you how
I
I'm
wanna do
playing.
more
like,
polls.
I'm playing it this way because you obviously know how I feel about it. Like I am just shoving cash. I'm going cash, and I'm going cash into bucket number 2 from last episode, which is short-term treasury bills. Get my 5%, sit pretty, no downside risk. This is just beautiful to me.
Okay, so we're not the only players in this game here. The biggest player is the Fed, and they have a meeting next week. So how do you view that? Like, because this could feel very doomsy right now, but depending on what Powell says, probably more importantly what he says than what he does, the whole game board could literally shift underneath you. So
Exactly.
are you thinking about that?
Yes. So the way I'm thinking about that is I believe we're going to get a little bit of a reprieve here where we feel like, oh, God, we're out of the noose. That's nice. But I think that what I'm describing, this like doom scenario.
Wait, what do you mean by reprieve? Though, you said, what do you think he's going to do?
25 bips raise.
Okay,
And with that,
that would be
bullish.
bearish, I would argue.
No,
Well,
because
but
the
he-
market is pricing 50% chance of pause right now. So if he does hike,
Okay,
that
so
has to be negative,
even
right?
pause. Maybe he
Pause is
pauses.
reprieve, I think.
Okay, maybe he
Yeah.
pauses. Like I think that there's going to be a short-term reprieve where we believe like, oh, nice, and then market responds positively to that. But like I do not want to buy
don't wanna
into that
participate.
narrative. Like I want to be in treasuries earning my 5% and be like, okay, you guys just continue walking off the cliff, and I'm just sitting pretty.
I tend to agree, and I want to
I
hear.
mean, I'm
these guys.
rolling with that as well. That's my game plan.
I want to
For
hear
sure.
your guys put on it too. But in my mind, whether they hike 50 basis points or they pause and say we're just going to take a chill out time and just see what happens, I think either way it's bearish. And I'm thinking in like a 6 to 18 month time period, not like a 1 month trader time period. And the reason is that obviously if they raise rates 25 basis points, or odds are low that they raise 50 basis points, but they do, that's obviously bearish. It's against what the market is expecting. And, Powell, I think it's more important what he says. And if he says, yeah, we solved that problem, back on the train, employment is too high, wages are too high, inflation is too high, we're back on fighting inflation train, that's bearish. If he pauses, we may see, one of these like 3 month, 6 month forward-looking S&P 500 is up, but I'd expect within 3 to 6 months, inflation starts ticking up again. Like we saw in early 2019 when Powell paused, the market did like a straight V and just started shooting back up. And if that happens again, people will think that financial conditions are loosening, and I think inflation ticks back up. We haven't even gotten the CPI print, but like if you look closely, I think a lot of people miss that if you look at the 3 month annualized rate of a lot of those metrics, they're actually slightly increasing. Yes, the year over year number is going down, but the 3 month annualized rate is actually slowly ticking up. So
Well, you have to drill into the numbers he's looking at,
Right.
too, because he doesn't care about.
So what does he
Blanket
care about?
CPI.
The month over month?
you posted about this on
core
Twitter,
PCE?
Steven. You want to take this one? Like why you thought it was bearish when you immediately saw it?
Yeah, I mean, core came up above expectations, and then the 3 month, right? The 3 month is, I think, really important. The 3 month trend annualized, right? Because the data is still really messed up year over year for the last couple of years. It was just like a shit show. So you want to look at like the 3 month trend sort of annualized. Like we've made no progress since last fall, basically. Like I think we had like some of the hottest prints since September, October, whenever it was. That's not good. It's not what he wants to see. And keep in mind, like a week ago, we were 0% of a pause, and like we got up to like 50% of a 50 basis point hike, right? It might have even been higher. I didn't see like They were moving around a lot. It's kind of crazy just the volatility around interest rate and interest rate expectations. I mean, we were down 12% today on the 2-year yield.
We
right?
went down in a 1 week period
insane.
over 100 basis points. That is like unheard of. Last Wednesday, I think when we recorded, the 2-year was at 5%. It's like at 3.8% now or something.
Yeah, like a lot of our
ridiculous.
audience is crypto people, and they're used to their shit coins going up 10% in a day. Like this has got to be like a Six Sigma move for bonds or something. Like it's just unheard of. Like I don't know if there has been a move like this since like COVID. And COVID
Can you tell
was, like,
people why the 2-year the yield's going down, why that's bad? Does that mean people think a recession is coming and they're being fearful?
I mean, it could go down for a lot of different reasons, right? Like the market is pricing in cuts. They were not pricing in any cuts this year. Remember, we were pricing in cuts this year, and then we got into this paradigm where everybody was like, you morons, like inflation's here, and then cuts went away for this year. We're like, is there even going to be a cut next year? I don't know. I think the market was still pricing in some cuts like mid or early next year. But now we're like cuts by like, I think we're up to like 2 or 3 cuts by the end of the year now in the span of, right? So that's going to weigh on the 2-year, right? That has to get priced into the 2-year.
And if we go back to the data we just went over in the Alfalfa round, like a pivot, meaning cuts, doesn't necessarily mean that it's up only from that point forward, because something really bad could be happening that caused them to cut.
Yeah, I mean,
Look, sounded like it could be anywhere from 1 to 18 months of
Right.
until you hit the real
Trough.
yeah, I don't know. I think it's a confusing time right now. Like I am it depends on what Powell does a lot, right? Like he can send the market to hell or to like an absolute moon landing, you know, depending on what he does and what he says in the short term. I kind of agree with you guys that ultimately in the medium to mid long term, like it does seem like we need to make like another, you know, pit stop at the ground floor before we go back up again. It's just sort of a path dependency on how we get there, right? Which is like kind of important if you're like a shorter, you know, the shorter term your investment horizon is, the more the path you take matters. I'm sort of the opinion that nothing that happened last week is all that relevant. Maybe I don't want to say it's zero relevant, and clearly the bond market thinks it's relevant, and I'm not going to sit here and tell you that I'm smarter than the bond market, but like inflation is still bad. Like that hasn't changed. I think they did a good job of shoring up like the issues with the banks. Like I don't think those particular issues are systemic. And I think Powell should hike 50 points. Like I doubt he does, because he might think it's going to spark like a panic or something, even though it's probably the right thing to do. So he'll probably do 25, I think, is the compromise. I think if he pauses, like I think we probably melt
up.
Yeah, because like I don't think anything is really that broken in the short term, right? And if you are just left with this like hot economy and this gigantic bucket of cash on the sidelines and a market that is clearly foaming at the mouth to take on risk, if you've been around for the last 9 years, and any hint of even a rate of change like is just been like, okay, let's buy all the dog coins again, right?
With a ton of cash on the sidelines.
Yes.
But
And
what about, so how do you square maybe credit drying up and expansion of the economy drying up because of this? Is it, hey, the economy's so strong that if we did slow down credit, if there was a pause, asset prices still go up because, well, the fact is people have a ton of money in their checking accounts. They also have a ton of money in money market funds they could easily pull down. I think the reverse repo is still over $2 trillion. So is
yeah,
that
that's
kinda
just like my generalized thought, is that there's just like a gigantic bucket of cash that's just like wanting to take on some sort of like duration risk and is just currently just parked in just, you know, safety.
So can I draw upon my 6 episodes of technical analysis
please?
mentorship?
I love this series.
There are some liquidity levels on like the S&P 500 ETH that look to be sort of like ripe to be run on the upside. So ETH looks like it could run 1,800, 2,000 in a bullish scenario. But then, based on my 6 episodes, it looks like I would probably want to exit ETH there. I would want to exit S&P 500 at like 4250. But like those look pretty low hanging. Is that what you're seeing as well?
Yeah, I think crypto liquidity is kind of obvious. If you want to think about that, in like when we say liquidity, we sort of broadly speaking, look, mean like where you kind of look at a chart and you look at where like gigantic players would be able to fill orders. Like the basic principle behind this is that, if you're CZ of Binance, you're not clicking market buy on $1 billion of Bitcoin. You have to use passive limit orders to flow. So you need people, if you're buying, you need people to sell into you. If you're selling, you need people to buy into you, right? Which is why you tend to see the market reverse after we do things like run a bunch of critical lows or run a bunch of critical highs, because often like large players have absorbed orders at those levels, and then we go to the other direction and then they sort of distribute. And that's kind of like how that's like kind of what Eric's talking about, right? I think that there is ample like liquidity to the upside that you can kind of see on Bitcoin, ETH, and crypto in general, because we had this gigantic gap down last year that just left all this air. And these zones where there's just air, where price goes very, very quickly, tend to be like really volatile areas when you go into them, where price can move a huge distance like very, very quickly and get people either FOMOing or panicking depending on where you are, right? So if we break 2K ETH right now, I think there's like a big gap where people could be like, "Oh my God, I missed the bottom. It's bull run time," and price could go 2K, 23, 24, 25. It could happen very quickly. Like if we go melt up status, which I do think is a probability. Like I am not saying this is going to happen, but as like a swing trader, I am looking for a signal for a spot where we might get like kind of like a .com bubble-esque melt up, because I think that is a possibility. If we get like a bit of a policy mishap, right, we have the ingredients for a melt up, which would be this like short-term like mega moon in prices followed by like a rug that's going to just really kill everybody.
Okay, can you maybe go one step further and steel man the opposite case? Like for the people in the camp who are like, okay, we're gonna melt up to 2K and then we're gonna keep going. This is the start of a new bull run. Like I'm trying to figure out like why could they be right? And I'm having trouble seeing it beyond that 2K point, but sometimes we get in a little groupthink here. So what's the case for like why that could run higher?
You could get a pause. You could get inflation taking a slightly long time to kind of come back. And then you don't have like a credit event. And then like some of this stuff is blurry, right? Like if we got like a 3-month thing and then like dumped, like Eric's sitting on the sideline with his cash, he's feeling cozy. He's like, yeah, whatever. I missed this 3-month nonsense, right? But if you get like a 2-year like slow melt, then were you actually being a prudent investor, or did you like kind of miss like...
No, you missed it.
You kind of missed it, right? So this stuff is not that simple. Like if we get a mini melt of ETH to like 3K from 14 and you didn't participate and it takes 2 years of your life and then you round your trip and you just sat there in cash the whole time, like maybe you feel okay, but you probably don't. You probably feel really bad at the top, right? That's the type of stuff that like gets people to be like, I can't deal with this anymore. I have to buy.
Fuck it, I'm buying.
That's why I bought it like 1450 the other day, because I was like, look, this is just one of, like, there's sometimes spots where you just have to buy, because the worst case scenario is just like you lose a little bit more and you're whatever, and you know that you're wrong. But if you didn't, then you're like, if you're sitting around right now, you didn't buy 1450, you haven't bought anything, and then ETH goes to 1750, you're like, what do I do? And then if it goes from here to like 1850, you're like, and eventually people, they just like, they can't deal with it.
Yeah.
And then they buy the top.
Because, I mean, it went to 1750 in like 4 days.
Yeah, it was
like,
insane. It was an insane
so,
move.
like, if it went to 2,500, like at some point, all the money on the sidelines would be like, oh, that was the bottom.
Yeah, psychology is insane, right? Like I do this all day for a living, and I get wrapped up in it and make terrible decisions all the time. And like what you think you're going to do ahead of time in the moment, you totally end up fucking up. Like if you don't actually have like a good process and an execution plan in the moment, because in the moment we all turn into apes and we just go monkey see green candle, monkey click buy button, and then that's kind of it, and we get wrecked. Which is why I like sitting here with you guys and try to game plan ahead of time, right? So like I'm curious, like what are you guys doing right now? Because I do feel like this is an inflection point right now, and I like having these discussions at inflection points. Like a lot of the times we talk, it's like noise. I don't think there's noise happening right here. I think there's something that's going to be like a big change. I don't know exactly what it is, and nobody does, but we want to game plan for all the scenarios. So I don't know if anybody's, I know Eric's kind of, sitting in cash. Like, what are you doing, Nick?
I mean, today I actually just moved I had some cash in Coinbase for price triggers, really low triggers in ETH, but I moved the final bit of it to a money market fund at JP Morgan today. So my going back to last money episode, I have all the cash in this kind of like second bucket, liquidity bucket, where I'm just, earning yield. I tend to think we're in like this long-term bearish phase, and I'm not necessarily like a trader. Obviously, I made that trade. I mentioned the Alfalfa round that might last a month or two. But I'm not going to try to play this, like, if there is a melt up for like 2-3 months, I don't, obviously if we go past 2K, I'm going to feel like that was a bad move and I was just flat out wrong. But if we go to 2K and hover there and maybe run back, I'll feel like I'm right. And I'm just trying to decide, where I would start buying ETH. I think like 4 episodes ago, I said I'm roughly 20 to 25% allocated for my growth bucket, which is for me is ETH and some high beta ETH tokens. I'm certainly not going to fucking touch any altcoins. I mean, I'm shorting them right now. So I'm going to see how this plays out, but I tend to think we're still in this long-term bearish mode. I don't know how far we go down. And I guess around like 1,400 start dipping my toes in, which was a lot higher than I previously thought it would be. And just kind of recalibrate that number if and when we get closer to there. And I think, in terms of recession starting, I still think it might take a while, might take till the end of the year. So I think patience is going to be rewarded here. And I think if this is either going to be like an absolutely legendary show of patience over the last year and maybe one more year forward, like it might be 2 years of patience. And if we actually do run closer to the lows of like June of last year, or maybe even, lower than that, it'll be epic. But I still have some allocated. It's like when we do these run-ups, I'm like, okay, I don't feel terrible because I have, a quarter of it allocated. So I like that that's there. And then, just try to be patient, not try to FOMO, earn the yield, and, try to make money in my actual business so I can keep funneling cash into that bucket so that when it does come, I can be greedy. Because I do know that in general, in the past, when we've gone through these long-term bearish cycles, like I haven't necessarily been the one who's like, when everyone is low on liquidity, I'm high in liquidity. And like, I want to be that person.
You want to be Buffett.
I want to be Buffett. I want to be like, I'm ready for it. And I'm not going to like FOMO in. I'm going to be patient. I'm going to try to stick to these like frameworks that I have in my mind that are constantly being tested whenever we have conversations and play it out. But I don't blame people for thinking, this could be the start of a pivot, even if it is just a pause. We just said that like bear markets troughs, 1 to 2 months before a pause. So you could still see this like 3-month run up during that period. Crypto tends to front run, the S&P. So I don't think I can say in the 3 to 5 month period that we won't, see a run up. But I just gonna be like you said about Eric, probably patient and stand by. So I don't know. That's the current thesis.
Okay, guys, I want to wrap with some Silicon Valley talk.
You want to go into the...
Yes, I want to make sure we talk about that. That was a really important thing, and I feel like if we don't talk about it, we're not going to talk about it next week. So, and And yeah, I'm in a similar place. Same moves. So we can wrap that. For me, like I said, like that entire situation left me feeling really disillusioned. And I saw an entire industry of people that are taking so much risk and working so hard from all types of backgrounds. And I'm referring to founders here and the people that work for these founders, the employees of startups. 60% approximately of Silicon Valley Bank's assets, deposits these are startups. Excuse me, the other way around. 60% of startups bank at Silicon Valley Bank. So that's tremendous. Like, what would have taken place here if depositors, as in these startups, did not get their deposits back, would have literally flushed the entire innovation of the United States down the toilet. Like, there was this meme that was going around, and this starts to dig into some like culture, political conversation, but it is important to talk about. There's this meme going around where it's like every time one of these big banks goes down and asks the government for money or a bailout, they referred to it as a Silicon Valley bailout. You guys might have seen my rant I posted, that the government steps in and obliges overnight. And then the last little example was like, but my wife has cancer, can you please pay for it? And it's like, government's like, nope, go fuck yourself. But that's not true, first of all, because Silicon Valley Bank did not get a bailout. These were the depositors. And people are so misguided on Twitter about the difference between venture capitalists, investors in general, founders, and employees of these banks. They were confounding all of these into one bucket called elite tech bro and saying, all of you can burn in hell. We don't want to help you, and you all deserve this. And the take on Twitter was, again, like, I have to sit there sometimes and think about it and say, are we just witnessing a very toxic minority of people speaking up on behalf of a greater group? Or is this really how society feels? Because there was like this female founder that wrote a long tweet thread about her life. She's like, I'm the mother of 3. I support my husband. I come from this like small town. I started this company off my back with my own money. I got lucky and I raised a seed
Didn't
round
she say
for
she's
3
like,
million people.
I drive a Hyundai Sonata.
Yeah, I'm sure there were so many of these, right? And then people were just like, sorry,
She
lady.
ended up getting dunked on.
She got dunked on. Like, sorry, lady. Like,
For some, like somebody was like, you donated like $40,000 to this Montessori school. Why are you pretending to be like a...
there's deep dysfunction in the way that we look at the innovators of society. Anybody that seems to get a certain amount of money, whether it be that it was from an investor or that they earned it themselves, even when they came from very little, is getting dunked on and being put in this class of people that is elite. Even if they earned it, we no longer celebrate risk-taking, entrepreneurship, innovating. We're not celebrating that anymore. And in fact, anyone that's taking a risk, if they're not going to get backstopped by the government and their deposits are not going to be secure, A, why would they bank at any bank in the first place? They might as well put it in couch cushions. B, why would they take a risk and start a company? They should just go become a dentist or like some sort of, just great paying job. And C, it's like, if you know that your people and society around you is not going to support these great innovations that you're creating and the way you're trying to help people, why try in the first place? You start to become so nihilistic. And the most important point here is like the little meme about like, oh, please help me, my family, someone has cancer. It's like, oh, excuse me, did you not realize that there are companies that you were about to flush down the toilet that are doing innovation to make it so that your wife or spouse or child gets better access to cancer prevention, to like my friend Serge. My friend Serge started a company. His assets were at Silicon Valley Bank. This is a precision medicine company enabling the proper dose of chemotherapy at the point of care for children that have cancer.
Right.
He's helping that.
I think you're onto a good point because it wasn't the bank that got bailed out, it was the depositors.
Yeah, and that was great.
And these depositors, they weren't taking any risk like what the bank was doing. They were just depositing their funds in a bank like anybody else does. and then the bank folded. So the government was bailing out the depositors. not
Correct.
the
And
bank.
society just went,
But
no,
it's path
it's
dependent.
still coming out of
it's
my
path dependent
pocket.
because we did see the banks get bailed out, a decade prior, where like the equity was salvaged and stuff. So like I understand the vitriol actually for people that are saying like, oh, here we go again. We're gonna bail out the golden parachute for them.
That's like fine. But if you actually care and you think and you understand the second order and third order effects of how that plays out,
Yeah.
well, then you'd immediately say, okay, this is different. So you're telling me that if we had not done something, many regional banks would have gone under on Monday, if not this week, right now, today. There would have been bank runs all week. I mean, there were already people hanging out outside of First Republic all weekend. It would have been an absolute disaster of a week.
So
The startup ecosystem would be dead, like literally dead overnight.
So I agree with you. I think they could have made a better argument. Like they could have made the argument that on Monday they're going to have half their assets. They're going to cover payroll. They'll be able to pay operating expenses. Within 4 to 6 weeks, they'll probably have 90% of it. All said and done, they're probably going to have 94% of it. Big whoop. They take a 6% haircut. And Silicon Valley Bank got 200 billion assets. It's less than 10% of the size of JP Morgan. We have this acronym called systemically important banks. It is not a systemically important bank. And that if I was on that side and I really want to make that argument, to me, that's a better argument. You don't focus on who's a depositor. It's just that like, well, they'll have their money eventually. They can tap other areas of credit. FDIC is going to step in. They're going to give them cash to function. And in reality, it's not that big.
Yeah,
I think what they missed is that, I had general partners that I've invested with for real estate being like, hey guys, just so you know, game plan is most of our loans are with these regional banks. We're going to literally move all of the cash out 9:01, Monday morning. And, there could have been obviously further bank runs. But anyway, that was my take on like, that would have been the better argument on their side.
I like that, but it's just sad because it's like forced consolidation to the big four, basically. And
Well, it's
like,
not. I mean, it's not forced. Like these guys fuck themselves. Like it's not forced
no, it's forced if the government hadn't backstopped Silicon Valley Bank.
for the depositors, but
Yeah.
the bank themselves put them in this position. Like nobody like put the gun to their head to say,
I'm not saying I'm not defending the bank.
right. The bank
in any way.
The bank fucked up.
No, the bank's out. Like
the bank
bank's out.
fucked up.
But you, as a citizen of this country, as an innovator, as a banker, someone who just wants to put your money in a bank, needs to know that when you put your money in the bank, it's going to be there.
Well, the idea was always that for up to 250K. It'll be
Okay,
there.
so let's unpack that.
Yeah.
So
Can we
that's
unpack
where this
that?
argument just takes an absolute shit. Is
Right.
like this idea of a $250,000 FDIC insurance is not even enough for a small business.
Yeah, I mean, that
and
was-
people are saying like, well, if you have 2.5 million, you should have been smart and spread that between 10
should have
banks.
10 different accounts. Yeah.
Are you fucking kidding me?
But that's the nature of it. I mean, like treasury management was a thing, and then people stopped caring about it until it matters. And here now it matters, and it's like, oh
Yeah.
well, if you would have just
Yeah.
had 10 different accounts.
Armand, do you think it's not legitimate to say, hey, Mr. Smart Business, you can't just dump $100 million in cash into this bank and do no due diligence and not have any consequences? And taking a 5% haircut seems like a fair. If they got 3 cents back, if they lost 3 cents on the dollar, would you still be so vehemently like opposed to like the sentiment on Twitter? Like where is the line where it's like, okay, like this is like you're being way too careless and this haircut isn't that big? Like doesn't moral hazard come into play at some point when we're bailing out even the most minute things for like very egregious like deposits over like the limits and very egregious lack of due diligence on the company's part?
Yeah, I mean, I don't know, Roku or whatever had like $400 million, like something like that.
Yeah.
Like, no,
Like,
I get it,
why
and I
people
don't
are like,
mind
why are we?
No, I don't mind the haircut. I'm talking about like if everyone would have lost everything beyond 250K, like that would just be.
I think that
ridiculous.
They wouldn't.
The
lose
number-
anything by
the
250K.
number-
They were going to lose
like
5 to
250K
10 cents on the dollar.
is an arbitrary number to begin with. Like, why are we
Yeah.
using 250K? like that number is obviously not the real number going forward. You know, like 250K at the time that FDIC made that a rule, how long ago was that? Yeah, I don't even know.
Yeah, I mean that's a
30
good amount for like
years
an
ago?
everyday
Like,
individual.
So nowadays, like 250K means a whole lot different. And like we haven't updated that number. So like, you know, people have way more than that now in a bank. And it's like, well, maybe we need to update that number. And they are in the process of that. First, they're going to infinity. But like, I feel you. I feel the sentiment.
Do we support innovation in this country
But,
or
like,
not? Is
there
the
can
deeper
also
question.
be-
here.
This is another
This is the
question.
deeper question.
But there can also
how
be,
do we
like-
treat 60% concentration of like a group of people, not to mention the people that work for them?
But we're talking about two different things.
Yeah,
One is like
yeah.
how it should be versus how you should be handling the current regime as it exists.
And you're also talking about a generalized cultural sentiment towards risk takers, people who you're classifying as elites
Yes.
who aren't really
Okay, that's one
right?
bucket.
Versus
Fine.
like what happened here, the mechanics of the bank.
Yeah, yeah.
I actually think what you're talking about is an interesting topic. I would be curious if you want to maybe tease it and talk about it a little bit in the next episode,
Fine.
because I know this
Yeah.
one's getting a little long in the tooth. I want to isolate what happened here just to the pure finances of it. And I think where like the David Saxes of the world went awry is like the argument for bailing out Silicon Valley Bank is that if you don't bail them out, you are going to cause like systemic contagion throughout the country that is ultimately going to fuck the little guy. The argument is not like, oh, you have to preserve Silicon Valley innovation because we're so good for this country. Because when you say that, and then people are like, wait, you were going to lose 5 cents on the dollar, you kept $400 million in your bank account, and I'm bailing you out. That's just a bad argument. That like feeds into why people feel this way. They're like, these guys think they're so entitled. Like that's
I think
the
you made that
argument,
argument though. I think you made that argument that like contagion was the. I'm glad
That
you didn't-
is the argument. Like once you also go like, and also then you lose those people because they don't buy into that.
My buddy doesn't have a startup. I mean, he's been a profitable, cash flowing company for a long time. They had their money there, and he's like,
Yeah.
we're just texting on Sunday. He's like, game plan is move all the cash out again
Yeah.
Monday morning. Can I mention one other group that I think should be like washed of this earth, and we should maybe just hit the reset button on?
Yeah, sure.
The ratings agencies. I mean, flashback to like 2007, 2008. I mean, these guys were the people like, I mean, I just can't stop thinking about scenes from the movie The Big Short, which Eric still hasn't seen. So fucking
haven't
yell
seen
at
The
him in the
Big
comments
Short?
Is that a good movie? Or?
that the CFA has not seen The Big
Like,
Short.
honestly, this is one of the most egregious things I've ever encountered in my whole life.
Eric has a few of those.
Is that movie good?
Oh my God, we're going to sit here and
Yeah,
watch
you
it
have a
after we
few of
record.
these.
Anyway, these are the same people who rated those shit mortgage-backed securities and bundlings of securities as like AAA. Well, hey, here they show up again. Still the same people around. Moody's, Standard & Poor's rating, Silicon Valley Bank. Like I think it was like AAA minus.
I mean, that's a good story, but then you need to have Ryan Gosling out there like glorifying it. Like,
No, he's gonna pile up this. They're gonna make another one of this, and he's gonna pile up the Jenga pile again of all these banks who had these long
Well, don't
this
worry.
duration.
Don't worry.
mismatch.
They downgraded them.
Oh, they downgraded them
They
like
downgraded
a
them.
day
yeah, after the
So
stock
now
price
you
is
know.
depreciated
Like,
by 70%.
And I just don't. Like, there's a lot of vitriol being passed around, and I don't think it's enough on these rating agencies because if they can't get that right, why the fuck do they even exist? Like, why are they here? And let's say as a depositor, it may be too complex to analyze
AI
the
do
balance
it.
sheet and duration mismatch of the bank. And so there are these third parties that exist that do the due diligence and give you a letter grade and let you know.
Let
That's-
AI do it.
That's a good take by Armand because I think like when you do humans doing service-based
it's
businesses,
bullshit.
your job is to not get fired.
Well, especially when the incentives are aligned. Their clients are the banks and are so I don't know. Anyway, I just before we wrap up, I think we should just specifically direct a little hatred towards
Fuck
towards
those guys.
Yeah, seriously. Like, why do they even exist?
They exist to capture. They exist to They're just like it's just regulatory capture. Just like just exploit this bullshit, and we'll just insert ourselves here and collect a fat paycheck and add no value to the system, and actually inadvertently create systemic risk because we give people a false sense of comfort when there's
Right.
one. Yeah, it's great, awesome.
All right. It's great. Thanks for joining us. Drop a comment. Let us know your thoughts. Let us know what to bring more. Hop in the Discord. Let's talk. And drink some dry farm wines. Peace.
Bye,
Later.
guys.